Welcome back to the first lab session of the day and the week from Forex Trading Wizard Academy. For this first session of the week, as after the past weeks, significant movement on gold and other pairs. So you can see gold has opened with a big gap here, and with this gap open, the market has initially bounce off this level. This is the daily chart. 610 pip move in the first session and the second session of the day. Now this is significantly bull market at the moment, and looking for an entry from a key level of support. And if you guys are first starting the day, let's look at what kind of trading opportunity we have here in this market. Now, along with also gold, we are looking at, beside our gold checklist, we will be also looking at dollar yen, which is as well moving back to the upside here. So keeping both of them in our watch list. So starting with gold, first of all, we can see that gold was, since the market open, significantly bullish. Now this is the 15-minute chart. As expected, with the market open, we have seen that gold had a stronger breakout early in the Asian session, and with that breakout, the market has moved back to the upside to the major direction of the trend. Now as we can see that later this afternoon, gold started to pull back again to the direction of the breakup structure. Now we can see the market is coming for now deeper pullback. Now this is where we are looking at for an entry opportunity for this market. If you guys are here that waiting for an entry, make sure you like this stream and also subscribe to the channel if you haven't done yet. Now beginning with this market structure on gold, we can see that there was a significant bounce back to the upside here from that level. And starting with, first of all, daily price action to see what kind of market structure it has formed on the daily time frame. So let's look at the daily, and then also we are looking at the bigger picture. That means that monthly and weekly price action. There has been a little bit of change in the timing due to the timing change here in my zone, and I hope that you guys are getting in the right time in your zone. This will be the new timing, that as there was a change in the some daylight savings. So hope that that's making sense to you now for the new timing. At the moment, this is our current London session live time, and also coming up later NY session live time later. Now here is what we are looking at on gold, that gold is significantly bullish. If you look at the daily chart, you can see that this is the daily market where there is a daily impulse to the upside here in this market, which is a bullish price action from the long-term perspective on gold. Now the market has tested the 10 EM in the past, that you can see during the FOMC here, and the market is maintaining this uptrending market. So this is the number one, or the most important task for us, is to find out, first of all, direction of the trend. That's why you guys see that most of the trade that we open is to the point, right? And the reason that win rate that we can maintain is because of we trade based on the trend. Based on trend, this is a very old concept. If you go to almost 150 years ago, when such as the J.C. Livermore traded, they also talk in their quite a few books that he has in the past, that he talk about the trend, right? So the only way a trader can become consistently profitable is to trade based on trend. So if you are not trading based on trend, then definitely this is something, the first thing that you need to look at is to trade based on trend. That means when the market is trending, then we need to look for the trade in the direction of the trend. Now, what do you see on the daily time frame on gold? This is a bullish trend, right, which is showing that strongly bullish market structure. Now, in that bullish market structure, the market is maintaining series of higher high and higher low, which is in an uptrending market structure. Now, in that uptrend, what do you see here? This is the daily candlestick pattern, guys. Daily market is super important because this is where most of the market structure that you can understand the bigger picture. Daily market is not a very higher time frame, neither a lower time frame. Therefore, daily price action and the market structure is the first thing that we look at to see that overall direction in that market. So if you look at here, you can see this is daily market structure where the price has tested this support level from this FOMC drop, and the market has made its move back to the upside, followed by this pullback, and we can see that another impulse, followed by we can see there is a narrower pullback, and the market has started to bounce off that level on the daily time frame, which is showing that gold is significantly bullish at the moment, which is an uptrending market structure. The current daily candle, today is the first day of trading weekend. Today's candlestick pattern is super important. Do you think that's so, guys? If you think, make sure you like this stream. Did you like this stream? I'm pausing for 2 seconds so that you can smash the like button, and YouTube algorithm likes it, and say yes in the live chat if you are here to start any trade setup that we are beginning. Thank you. And what we can see in that market structure, if you look at the daily price action on gold, that where it's maintaining this uptrending market structure, where the market is creating series of higher low, which is in an uptrend, and also higher high that you can see, which is maintaining this uptrending market structure. Now, in that uptrending market structure, that the market is moving back to the upside with creating series of higher high and higher low from the daily, that the market is showing up its pattern back to the upside here. This is where the resistance line that you can see, which is the previous resistance, which is turning support here on gold, and the market already has created a series of higher high and higher low. If you look at here, you can see that it's maintaining this bullish market structure. Now, in that bullish market structure, the back-to-back 2 daily dojis in fact created a swing high, which is turning a swing low here. Now, in that uptrending market structure, we are looking for a pullback now, a breakup structure, which is the key of understanding a market. So if you look at the 4-hour chart now, we are looking at the intraday perspective for an entry. Now, guys, you can see that back-to-back previous session there was a massive bull candle followed by another bullish candle. So back-to-back 2 significant bullish candlestick pattern here it has formed, which is showing that the market may potentially bounce off that level, which is highly likely that gold may potentially continue to rise back here to fill that long wick at the top. So we are looking at that uptrending market structure, a bullish confirmation for an entry opportunity in this market. And with that entry opportunity that we can see on gold is showing the market to remain bullish back to the upside here. Now, what we are looking at here on the 1-hour chart, let's mark that down on the 4-hour time frame here, which is a support level. And in that 4-hour support, that you can see the market has maintained this support level here, which is a key level of support. And what you can see that in that key level of support, the market to retest and then to reject back again to the upside here to create a new higher high in this market. Now, the current intraday support that you can see here on gold is this. Now, this is the current intraday support 3917, 3918 level is what we are looking at here, that the market to break that low before it potentially bounce off that level. And if the market breaks that low for the current intraday support, that which is the 4-hour support, we could see that there is a fair value gap. You can see in the daily low, and this is the daily low, that you can see the previous level, which is here at 3899. So 3917, 3899, these are the levels that we are looking at in between that zone to look for an entry. In case the market is breaking that low, which is 3899, then we could see the price again dropping to the, in fact, to the exactly to the daily low, and that's where big opportunity. But I think that the market is not going to drop to that level. Instead, what we are looking at here, an upside momentum from those areas. Now look at the past price action that we can see in this market. You guys have seen the previous session in our NY session, how the market acted according to the market structure, that we have open positions. Look at this one here, the past week. Did you miss any trade in the past week that you have opened in here in that area? Was a significant winner, and some of the candles is missing here. Really weird to look at. Let me see that why they are missing in this chart. You're the one the completely two different kind of price action. There's a gap open on Wanda. So we can see that early, once the market opened from this key level, the market has made its initial bounce back to the upside to the major direction of the trend. Currently the price is on a pullback, right? So if you look at the 4-hour, that you can see the price is approaching that previous support level, which is an important support area. And this is the daily low as well, that if you look at here, so far the market opened with a big gap, and with that gap open, as it opened with a gap, if you look at here, you can see once the market opened, it bounced off that level. Okay, so with that one single bounce back to the upside, with this bullish impulse on the daily, the market is showing that the price is absolutely upside here, which is to the major direction of the trend. And this is where we are looking at the market to show up its pattern, that the market is moving back to the upside. This is the daily market where the price opened with a gap and then has shown that the price is maintaining this uptrending market structure here. Now looking at the 4-hour chart, which is a support level, the current intraday support, expecting this market potentially to break below, which is also the daily gap open. Now understanding market structure and also finding a zone where the market is preparing for a move is the key to enter any trading opportunity, right? So now let's dropping down to the lower time frame to see that exactly where we are looking at for our market to give us that entry opportunity here. So looking at here for a breakout structure, which is very important to look at. All right, so that where we can say hello guys, welcome back to this live session here on first day of trading week. As if you guys look at, gold has broken back from this high here, so we saw that the market started to move back again to the direction of the trend, so which is the daily move that you can see the market has made its move back to the upside on the daily time frame, which is the previous resistance line turning support here. And in that resistance turn support, the market is maintaining that uptrending market structure. From the intraday perspective, from 4-hour chart, that you can see the price now on a deeper pullback. So this is what you're looking at here for potential entry. Gbpjpy, morning, welcome. Eurusd, welcome back to this live session. So GJ, that looking at, we are looking at also the dollar yen, that you have seen there was a gap open. And if we look at GJ here, we can see also there is a gap open and a bounce off that level. And both of this instrument currently showing that bullish trend on GJ as well as the dollar yen, while we can see that euro dollar is currently on a downside momentum. As with the market open with a gap, we see there is a bearish price action on euro dollar. And while we can see that gold is maintaining this uptrending market structure here in this instrument. So that being said, from the intraday perspective here on gold, we can see the price is approaching that support, where it's an important key level of support from the 4-hour chart on gold. And with that support test, the market is in an uptrending market structure here. Now in that uptrend, the price is currently pushing back for this deeper pullback as there is a new session begins. What we are looking at for a move and then rejection back again. As you can see here, the market maintained that market structure multiple times, that we saw that there was a breakup structure here, which was a pretty massive breakup structure, which has given stronger momentum, followed by a bounce back above, and then we have seen another breakup structure. The market bounced back again in that direction. Currently the price is at this high here, and in that market structure, what looking at here, that the price to break below to this intraday support level, and from that support what we can look for an entry from this key level of support that you can see in both kind of charts, that the market is currently in a pullback and it's an established uptrending market structure. We'll be waiting for that breakup structure. There is one liquidity zone here that you can see, and there is another liquidity zone here also you can see from the lower time frame price action. And this is where we are looking for this market to come back, to retest, and then to return again back above to create a new higher high in this market. So that being said, we are looking at in this market for a potential entry opportunity. As soon as we find suitable entry, we will be looking to go long with a high probability trade setup here. This is a key support level where there is a big move that we can see on this 5-minute chart here on gold, and it has maintained that uptrending market structure, except this zone here that you can see here, there is a breakup structure, and that breakup structure here that you can see the price currently approaching that key support level, and from that key support level expecting the market to bounce off that level. And we are looking for here that entry opportunity in this market. And as the price is approaching that support level here, anytime we could find that entry as soon as we see that suitable price action confirmation in this market. Here's a move that you can see the market is maintaining this currently in a downtrend, a breakdown, pullback, another down, pullback. The market is maintaining this series of lower high and lower low, which is showing that this market potentially continue to drop back below here to this support level where there is a high liquidity. important area of value. And also there is a fair value gap that you can see in that area. So trading fair value gap is absolutely important to look at where the market is heading to. Now you can see that with this fair value gap, the market may penetrate back below before it potentially bounce off that level. And here is the market is maintaining this downtrending market structure where the price is approaching that key support level, where the market could bounce off that level to create a new higher high in this market. And looking at this lower time frame, there's a market structure that you can see the price is breaking that low here to create a new lower low. And where the market is approaching that level, where there is a key support level, and waiting for the price to potentially drop down here to this level where there is a high area of value. Now if you look at the 1 hour price action here, that the market early with the Asian session, there was a massive breakout to the major direction of the trend, and from the breakout the price has slowly built that momentum back below again to this support level here in that market, and which is the daily support that we are looking at in this market to revert again back above from this level. Welcome. Approaching this market to potentially come back here to this support level where there is a high liquidity, and which is an important area of value that we are looking at for this market to come back, retest, and then to potentially reject back again to the upside here in this market. Approaching this support is important. It's crucial to see the market is on that level where there is a high area of value. We are looking at here the lower time frame trend, which is a drop pullback, another drop pullback. The market is maintaining this series of lower high and lower low, which is in a downtrending market structure. Now in that downtrend, what we are looking at here in this market to break below to this key support level and penetrate that fair value gap. And that's where you can look for another buying opportunity, as once the market breaks this fair value gap, if you guys look at it, you can see that there is nothing here. It's a complete imbalance, and this is where the market begins early a bigger move. So breaking below here is where we are looking at in this market to bounce off that level. This is what we are looking at this market to potentially move again back above in that area where there is a high area of value. We see that this is series of lower high here, and with this series of lower high, the market is approaching that key support level, which could break that low here and then to return again back to the upside to create a new higher high in this market. What we are looking at here, guys, that this is a downtrending market structure, a potential break of this support for us to give an entry opportunity here in that market. And this is what, if you look at that lower time frame price action where the market has approached that key support level, and from that key support level the price to bounce off that zone where there is an important area of value, and that's where the key entry criteria in this market. We are looking at here for a potential break of structure in that area for an upside bounce from that level. And as the market trend is maintaining that bigger picture long-term bull market, we saw that there was a break of structure earlier, and from the break of structure we are looking for an entry on a deeper pullback here. So if you look at here, back-to-back 2 hourly bounce followed by this pullback, another bounce. Currently the market is approaching that previous swing low, which is the 4-hour support as well. So if you look at this market structure, here you see the same kind of price action at 3917. And 3917 which is the current support. And also this is an order block here. In that area, the market has initially bounced off this order block and move back to the upside, pullback, another more pullback. The market is maintaining this higher high and higher low, which is in an uptrending market structure, where from that support level, gold has made its initial bounce back to the upside, and we could see the price to potentially continue to trend in the major direction. kind of market strategies it is making. As you can see from here, it's started to break below, and with that breakdown, wanting to see the price to come back here to this key area of support where there is a high liquidity zone. This is a key support level that expecting the market to come back down here to break that low potentially, and then to return again back above to the major direction of the trend. Here's the move that you can see the market is slowly breaking that support level that we are looking at, and with that break of support, the market to continue to drop here to create a new lower low in this market. Approaching that support, expecting the market to potentially break that low here, cracking that zone, and then to revert back again to the major direction of the trend. So this is where the market is currently trying to break that low. And as if we look at the daily price action here, we can see that this is the daily market structure where there was a gap open early, and that gap open is quite significant. As the market opened with a gap, we could see that this price potentially to continue to trend back here to the upside, and daily drop, any drop back below here, which is an opportunity for us to go long. As if we look at the volatility for the daily, we can see 300 and almost 15 pip move already on the daily major direction, which is currently from the intraday perspective. If we look at that, we can see the market has made initial bounce back here to the upside to create a new higher high in this market. So that being said, we are waiting for a break of structure, especially to this previous support level, which is an important support that we are looking at for the price to come back to fill that fair value gap and then to give us an entry opportunity. If the market is breaking 3919 or below 3917, getting a rejection is an opportunity for us to go long for this upside base. Are you ready for an entry? Say yes if you are ready for an entry here. Good morning. The whole market is bullish. Yes, we see that it's a strongly bullish market. May I ask why whole market bullish? Did you see Gbpjpy opening jump? Yes, there was a massive gap open in majority of the instrument early today that you can see. If you look at dollar yen, that's a massive gap open. Gbpjpy also there was a massive jump on gap. Now Opening gap, looking at gap is also very important to look at, as gap open gives a significant clue in how the market is doing at the moment. And that is why it is so important that we always look at the overall picture in the market. Now, if you look at that, for example, why does the gap open? How the gap is telling us for this week the market to go, right? The first thing with the gap, if we ask ourselves that why does that in fact gap open, right? Can anybody have an idea the reason why gap opens, which is to look at very importantly? And gap opens, right? It's very, very normal phenomenon in the market, but gap always indicates something. You'll see that there is a daily gap, even intraday gap, a weekly gap. So, and how do you in fact trade the gap? Especially if you see that bigger gap like the one that we have seen today, how does that signals potential trade for the lower time frame or from the higher time frame? So if you look at gold, we can see this is another chart that now showing that gap clearly. Okay, now it's showing up that gap on gold, breaking all this level. So if you look at, this is the 4-hour chart, right? There was a doji in our previous weekly close, and then there's a gap. All right, so what is the gap level? Let's look at the gap here. How many pip gap on gold that we have seen opened early? Nearly to 200 to 190 pip gap open early on gold, and that's a massive gap. And with the gap open, the market didn't look back. We saw that there was a complete break to the upside. Now the question is, the market is leaving the gap here, going back up. What the gap signals to you? There's a very important correlation when you look at the bigger gap, and you can look at the past to understand how the gap really help us to understand the market and how we can trade those gap. And this kind of bigger gap happens rarely, but when it happens, let's understand that where you can find that kind of gap. Most of them are filled, right? So look at this market structure on gold. Now there is a massive gap here, right? Which is pretty big gap that you can see on gold, and which is nearly to 200 pip gap. And in that gap area, right, what the market is signaling potential. That means what the market is telling you with this gap open. One very important aspect of the gap opening is that the market will never leave a gap unfilled. That means there will be some kind of filling of the gap. That means what does that mean is that if the market leave a gap without proper retest, you would see that the market will come back here to fill those gap before it move in the major direction of the trend. So that means the first criteria that we can see, that when you are seeing a big gap, at some point the price will come to fill that gap. So as the market early open with the gap and the gap has not been filled, there is a possibility for this market to drop down again to that gap. This is the first thing, right? And now where we can expect this market to potentially drop back down if it is coming to fill that gap. Now you can see that there was a triangular pattern here, which is a very important triangular pattern that the market has formed. And in that triangular pattern, if you guys looked at the trade that we have opened past week, from those breakup structure, it made its way back to the upside. Some of the trade that also I have shared in the premium group, including gold and dollar yen. So what was the gold trade that we can see, including all the strategies as well as the education that I have shared in the group. This is one of the trade that we have opened in those areas past week on gold. I bring that up here. And with including the strategy explained properly. I do share all my trade in the premium group. If you want to explore more about the premium group, we had currently very short period of time, 95% off to join, which is basically almost a free of charge that you can join today to get access to the exclusive trading tools as well as the strategies that I am trading every single day in the academy. So head on to the website for joining the premium right now, where when you are in the academy, you can get access to all my trading tools, strategies, education, analysis. Currently, it's on 95% off, and it's only for an exclusively limited time period. You can head on to the website and join now, as before it is getting expired to that. And once you join, you can get all the links on your email to join the premium group, where you can trade with me and also learn the strategy that I am trading. Now, let's look at here. With that move, once you guys have seen past week, quite a few bigger trade was opened from those areas, from those breakup structure. The market again heading back to the upside, waiting for now for the market to come back and fill those gap to before it bounce off that level. Look at the daily chart that you can see the market is showing the daily price action, where from the 4-hour chart, it initially has got that bounce off that level, and it's showing that the market potentially to go up and fill that intraday or the 4-hour level here. So as you can see, the market is maintaining an uptrending market structure with a rejection from this previous support level. Are you going to go long here? I will be waiting for further confirmation. As we can see, the price slowly building that momentum back to the upside. We'll be waiting to see the market to retest that fair value gap. All right, so this is a massive fair value gap here for us to find an entry opportunity. It's a very good area to look for potential trading opportunity below this key support level. It's an important support retest from the 1-hour chart. The market has initial bounce back to the upside here in that market. Lower time frame price action that you can see also maintaining this uptrending market structure, and which is a narrow red candle, which is a liquidity candle that you can see, and expecting the market to bounce off that liquidity candle. Here is the price just has tested that previous resistance line. The price slowly building that momentum again, potentially to drop to that support, and that's where our entry at the moment, where the market has bounced off that level, which could be an starting of again uptrend, or we could see that deeper drop. The possibility for us is to look for that entry. Now, analyzing the past entry, if you look at what did you saw here, do you remember those trades that we have opened in our previous session from those areas? Let's look at some of the trade that was open in this live session, NY session, and those trade can change your trading completely how they were open, right? So it is important that always look at the past trade that is giving you an indication of how the market is moving. Okay, so you guys know this trade here, right? That's where during the Friday session that you open from here, and that trade, how far it made so far from the level that you bought. This was the entry of that move. Exactly from that point onward, currently the market has moved to 2,868 pip, 28,680 points, right? So bigger wins is the key, right? 2,868 pip, guys, in one trade. If you can hold for bigger trade profit target, we didn't hold that. We don't need to take that many people on one trade. But this is an analogy to understand that to be profitable in this market, you don't need to open many trade. You need high quality trade and then let them to go a lot. Now, when you accept this kind of bigger trade, when you want to open and hold those trade, also you need to accept the fact that there will be some trade will come back again, will take you out of the market. But the one that is going a lot will pay you off everything that past trade happened, right? That's how you can remain profitable over the long term, no matter what. The only thing that you need, a system, a strategy that you can rely on, that over the long term it's gonna grow, right? And that's what we are doing here, that teaching the members, students, that to understand that at what level that you should be trading, or in what situation you should be entering into a trade to catch those kind of move in the market. And it's not hard, okay? If you look at, it's not that much of hard to enter this kind of trade in the market. So now that look at here, if you look at, you can see that this is the move. Currently the market is heading back to the upside, and from that area that we are looking at, as you can see, there is a very smaller candlestick pattern formation here, and what we are looking at, that the market to break that low, it could continue to bounce off that level. If you look at the 1 hour chart again, we are almost nearly to the candle close, and with this candle close, the market is forming a doji, which is showing up the price to potentially bounce off that level, or we could see that the market again coming back for another test of this intraday support level. And that's where the entry opportunity, that we can look for an entry from 3922 or below once the market has managed another test of that level. Welcome. So previous daily analysis that we discussed, also you guys have seen that posted on the channel. And here is the move that on gold, that you can see the price is with this break of structure, is now again trying to bounce off that level. And with that bounce, they're expecting the market to potentially trend down here to retest and then return again back to the upside. Along with on gold, we can see that dollar yen and Gbpjpy has opened with a massive gap. And that gap open has shown that the market is on dollar yen as well potentially remaining bullish in that area. Yeah, this is a completely bullish market structure. All right, so here is the market is showing up that the price potentially to revert back again from that support level, and it's showing that the market to potentially to retest and then to return again back above. Here's the key support level 3922. The market has initially tested from the 1 hour closed that you can see as a pin bar. Now as the market has primary rejection from here, so which is showing that this market potentially remaining bullish and would like to see that the price again retesting that support and then to return again back to the upside here to create a new higher high in this market. Therefore, looking at on the lower time frame for the price to retest again and then to remain again bullish to the upside to create a new higher high. There is an imbalance the market has left here. You can see this is also fair value gap, expecting the price to test and then to return again to the major direction of the trend. Can you explain what is liquidity? All right, so the liquidity, there are three very important aspects of the market that we look at. One is liquidity. How many of you have not understood yet liquidity along with the market structure we discussed, and which is very important to know, especially if you are trading based on the smart money system. Are you having any idea about the liquidity? If you don't have, you can understand that how the market moves, especially when there is a breakup structure, right? So liquidity is the fuel of the market. If you don't have liquidity, especially if you're a retail trader, you can trade with a very smaller liquidity, right? Because retail traders' volume is very smaller. But if you look at the bigger picture, right? Let's say bigger volume, especially when the market is moving. Now, for those who have just started traders, I know that there's a daylight saving time changes. So you started 1 hour earlier than your probably regular time because the timing changes in my zone. So I had to stick to the same time that you do every day. But in your zone, probably this is the time that we normally start our live session. So just letting you know that we start now 1 hour earlier than our regular timing for us to catch all this move potentially happening. So if you can begin with the earlier session, that's very, very good. Now let's look at here on that zone in the market. How do you identify the liquidity zone? How do you know that when the market is catching liquidity or when the market is preparing for a bigger move? Because once you understand that when the market is catching that liquidity, you can understand that the market, how it is moving, especially for the bigger flow in the market. So to understand liquidity, what you need is to know when the smart money is trading the market. Now, how do you know that when the smart money? Because you see that we see only the candlestick pattern in the chart. Some red and green candles depending on what color you choose. But when you are trading based on liquidity, you know that when there is a bigger order flow in the market, there's no other way that you can know that how the market, who is doing what on the backside of the market, right? It's impossible to know because no one reveals their trading strategy and no information will be given to you that someone, you know, in New York or someone in London or someone in Sydney or someone in Johannesburg somewhere placing $100 million volume in the market. It's $1 trillion market in a single day, right? And this is the time, guys, to prepare yourself from this market to pull out profit every single day, as coming up 2025, almost nearly to the end, 2026 and 2027. There was a news that I have heard yesterday, that I have looked at, and that really catch my eyes, and I have already discussed in our premium group that AI booming is coming to almost us, coming with 17 times nearly more than the dot-com boom, right? So there is an era, and each era there is a booming, right? There is an internet booming, and then there is a dot-com boom, and then coming up AI boom. Now when there is an AI boom coming, right, when there is a breakout of AI, what are you gonna do with that? Are you preparing yourself for that? Are you preparing yourself with the system that you need to live? Do you remember that I remember when I was very young, very young, right? We used to go to the, that supermarket, and we saw that there was a typer, like the people who used to use, and for those who are little age, you can remember, right? There was a machine that people used to type all day long, pressing the button just to write a letter. Now you can use just a voice detector to write a letter for you just in a matter of less than a minute, which they use 5 hours to, or maybe at least 1 to 2 hours to type it. Now those people who work there, they've been replaced. There is no need for this skill anymore. They've been replaced. Where they are going, because they have to learn that new way, new skill to adjust. Are you getting prepared for that? Traders need to do that. And not only traders, if you are doing anything, prepare yourself for. There is a time coming when you need to have something different to go with the flow. And that's what we are doing here, right? Along with all the strategies that I am trading, fully automated every strategy that I trade, and which is proven to be profitable. The only thing that you need as a trader is to supervise a little bit of time you trade. And that's what it is now. Right? You don't need to remember, that 15 rules of the strategy or 20 rules of the strategy, and then before you're making trading decision, you get freezed. Or trading on a daily chart. Trading on a daily chart is the most, what I'd say that if you're a retail trader, if you're an institutional trader, it's a different story. I would never trade. There was a time when I have got an advice from someone that, okay, trade on daily chart. It's a higher time frame. It's very good. And I open a trade on daily chart, quite a few when I begin, just to see that one trade to go to profit target took 3 months because of a bigger profit target. Do you want to wait for a trade to open and then wait for 3 months to hit profit target? Now, if you're trading on daily, you have some time to analyze the chart. Then your profit target will hit 6 months or 3 months, or stop loss after 3 months. That's very, very frustrating. If you wait for a trade for 3 months and then hitting your stop loss, that's nonsensical, right? Then, if you are trading on 1 minute chart, 5 minute chart, how much time you have to analyze the chart? The candle close, most of the 5 minutes and 1 minute candle close, in the last 10 to 15 seconds, the candle completely change. Let me show you. This is real proof. Even in the 5 minute chart, forget about 1 minute. You see that this candle is a great entry candle. This inverted hammer is a great entry candle for this upside bias. But at the time, 4 minute 40 second, you see that this candle probably like that. A green candle with a body. More often, in the last 10 seconds, 20 seconds, the candle will boom, back down, closing as a red candle, because the order comes during that time period. How much time you have to think all those rules of the strategy in the last 10 seconds before the candle close. And when the candle close, if you haven't entered the trade is gone. It's become expired. Now, how do you identify timing that as soon as the candle close, I'm going to open a position? As soon as candle close, I'm going to buy. As soon as candle close, I'm going to sell. But the candle has to close in a specific way. I need a shooting star. I need a hanging man on a support level. And then I'll go buy on 5-minute chart. And you see that in the last 10 seconds, the candle close as a shooting star. You have 10 seconds to make a trading decision. Because if you are not opening the trade in 10 seconds, as soon as candle close, the market shoot up. In the next 15 seconds, again move another ATR, 1 ATR. Before you open the position, the trade is gone. How do you trade that move? Automated system. But you humanly supervise it. Give the rules to the program. Say that, okay, if there is a pin bar here, there is a hanging man on this support, I'm going to buy on candle close. The program will straight away open exactly at candle close when it fulfills. That is automated. But you need to know the strategy. You know that you need to supervise the machine while you are letting the machine to decide for you as soon as candle close. That is AI, because someone else will do the trading decision for you. Now, what is next? Have you heard of agentic AI? That is also coming up next. That means you can create a program that will evolve over time to make its own trading decision. Because that EA or the AI will be able to analyze the past data and get informed to make better trading decision. It's the reality coming up very soon. How do you compete with that market? You need to prepare yourself for that. And you guys have seen that in this academy, we have updated nearly to 100 robots and AI trading system. Currently, we are highly efficient on that field. And there's a breakthrough coming up. There will be a lot of change. 17 times more than the dot-com boom. Everything will change. You'll see this in this world due to the AI. Are you prepared with that? If you prepared with me, get ready for it. I'm here all the time until we see that all the traders have been able to use the AI, use the artificial intelligence to change their life and also help themselves to become an independent, professional, profitable trader. All right, now let's look at here what's happening. Morning, welcome. Can't afford to wait for 3 months. Yeah, absolutely. Me too. I don't enter on the daily chart, but I look at the market on the daily chart to find the trade. Most of my trade that I open with bigger profit is 1 minute and 5 minute chart. Alright, so now what the market is doing here in that area. So you can see that the price is here, that this is where the market, this is a support level on the 1 hour 10 EMA. The price is approaching that level, and from that support the market now, initially we saw that there was a bounce off that level, and that bounce that you can see the market now would like to see breaking the low and then rejecting back here to the upside in that market. We're looking at again for another support test here in that market to bounce off that level. Welcome. Cool, that's what you're looking at here, as the market has again broken out of that trend line with a double bottom, expecting the market to potentially reject back again from that level with another retest in that zone. Okay, so we can see that with this breakup structure from this triangular pattern, that you can see the market now started to trend again in the major direction of the trend. We will be waiting for an entry from this intraday support level. If you guys look at, you can see currently 2.5 an hour remaining for this 4-hour candle to close, and I think that's where now possible entry opportunity coming up here for this session, for the price to possibly to retest again, to come back here for this session's low, to break and then to return again to the primary direction of the trend. This is the support level here, that on gold that you are looking at, and from the support expecting the price to return again back again to the major direction of the trend. Here's the key support level, expecting the market to drop down here to break that low. That's the session's low, which is the intraday support. Now, if the market drop to that session's low with one single drop, especially on the, if you look at the 4-hour support, you'd like to see that the market is dropping to that level on the 15 minutes without any pullback. And if the market drop to that without any pullback to that level, that's where our entry opportunity here to go long from that support level with any with a high probability setup. We're going to see a retest of this low here. Okay, we can see there is a breakup structure that on the lower time frame, as we discussed on the this is the 1 hour support level. The market is approaching to that 1 hour support where there is a 1 hour 10 EM as well. And so the current sessions here on the intraday from the 1 hour chart, the price is approaching that level. And that is where looking at in that market to test and then to return again back above here in that area. There's a complete breakup structure that you can see, and we'll be waiting for further downside for another retest of this support before we look for any entry. We'd like to see the market has tested this previous shadow here again. we're going to see that a bounce of that level. And if you look at here, you can see it's a complete breakdown in that area. So as the market is maintaining this uptrending market structure from this intraday, the current session's low is significantly important, that you can see here. And the current session low that you can see on this lower time frame, there was a breakup structure here, and just pushing back again in that area. We're going to see a bounce. Let's wait for the lower time frame here. Okay, so here we see some upside bias in that market. I would like to see that potential entry, as the market trend is showing that uptrend. 30 minutes candle closing with a doji here on the 30 minutes chart, which is, this is the 30 minutes low. We might be able to find an entry from that level, as the price tested this shadow, which is an order block. And with that breakdown, we'll be looking for an entry, and would like to enter by market here for this possible upside with the candle close. And we'll be waiting for a bounce of this order block here. Here is how many pip in that area. Stop loss, we are looking at 49 pip. It's a very smaller gap that we're waiting for this market to give us an entry in this market. So I'm going long on gold for this potential upside here. Entry by stop loss at 3927. So we open buy and expecting the market to potentially reject back above. This is a very narrow stop loss. Even the market is coming down here, I'm okay because I have very smaller risk. And as this market is in a bullish trend, there is a candle close, and this is a scalping trade. Will not take so long. As soon as we see enough profit reach, we will be closing with the running profit. Would like to see that a stronger move first here with this bounce back to the upside on gold. Would like to see it's crossing that high, which is to catch the initial peep here in this market. And also I have shared the same trade in the premium group. We'll be giving a full explanation of the strategy with the written format. If you are following the trade in the premium group, then I highly encourage you to keep eye for all the updates giving in the group for any trade that you are opening, either it's a winning trade or any kind of trade. But here we are, the main goal here for us is to find an entry in the major direction of the trend. So the price with my trade with that, there is a potential pullback coming, and expecting that this market to possibly to remain bullish to the upside here for short term at least. And one hour chart that you can see the market has in the 30 minutes, which is also a doji formation. And so my entry here in the trade is with this trade is at 3932.04, and we'll be trying to catch some peep here for this upside move in that direction. And it's a bull market. We'll be waiting for possible to create a new higher high here. So the 5 minutes candle closing is potentially as a bullish price action, and would like to see that going up here to catch that move the first day of trading week. And here is the lower time frame market structure showing that possibility to remain bullish, ready for a move. Thank you. And also for those who are in the premium group, make sure guys you do the risk management. I've shared in the trade in the premium group as well with entry, stop loss and take profit target, and there will be full detail explanation of each trade that I'm sharing in the premium group. Currently we have going on for 95% off joining the premium group, where you can get access to everything. And this is a very short term opportunity for the new members who want to join the academy. It might get closed very soon, this opportunity. You can visit the website www.forextradingwizard.com. Here is currently, this is 95% off, so that you can get some members. Is nothing in comparison with what you get here, but the main aim of the academy is to help traders who really need it. As we mentioned in the beginning, that this is the time where really trading can change life, and it changed my life. And I believe that for those who want to change life, quit 9 to 5 or do any kind of additional income that can change the entire, because the financial freedom is the goal of every human being, right? So if it is your goal as well, then we are in the same page. We are helping traders every single day, hundreds of thousands of traders every single day. So if you want to be part of the trading community here with us to see how you are trading, learn the strategy, and also trade with me every single day in the live market, then this is an opportunity for the members to come on board, to become a part of the community where you can learn the strategy that I'm trading, and also you can use exclusive trading tools, indicators, premium indicators, all those currently I'm giving it to all the members who are with me. And the only thing that I need to give access to this tool is when you are in the academy, to give this exclusive trading tool that can give me also the indicator where that helps me to understand when the smart money is buying the market. Look at this buy here, buy signals that is showing up. These are the smart money trading signals that smart money is showing that the market is moving in that direction. So to get access to that, make sure you visit the website right now and jump on the website, be part of the community where you can learn and grow as a trader. Okay, so here we see that we have opened the position, it's still running in profit, and look at the 1 minute chart. This is where the market trend, and expecting it to potentially break this high here. Okay, so it's moving in that direction. This is what we are looking at here, and this is 30 pip move up at the moment. Crashing back to the upside. All right, moving back above here in that area where the market is maintaining this uptrending market structure. All right, cool. It has gone up well above, and now is it time to take profit? So let it move a little further to the upside, reach that resistance line. We are running 35 pip up, and I'm going out with the trade with the running profit here. Awesome, cool. Let's take profit for the first trade, and I could run some more pip here to the full TP, but this is the first trade of the day and week, right? And we don't want to take the rest of the position off with 40 pip up currently with the trade I have closed in that position. Here is the move that you can see, take profit now. And what are you looking at here in that market where the price has made its move back to the upside, which is currently, all right, so 40 pip up, 40 pip taken profit here. Now profit taken, and it's now on a pullback. It might retest and then potentially reject back again. It has dropped for another pullback here, and bouncing off that level here that you can see in this market, and which is showing that the market trend is bullish, and we could see that potential continuation back above here in this market. As you can see, the price is maintaining that uptrending market structure. Are you going to see a break up here to the upside? We see there is a liquidity sweep multiple times in that area, which may bring the price back above to the major trend here to the upside. If we look at 30 minutes market structure, we can see that it is maintaining that uptrending market structure here to go ahead and potentially to create a new higher high in this market. And that's where the market showing up for this move back here. This is the bull market that's showing up, and so 15 minutes candle also closing as a bull candle. As the move there, you can see the market slowly building that pressure momentum back to the upside here, and as it is currently in an uptrend, we could see that potential continuation back here to the upside to create a new higher high in this market. As we are looking for progressing to the next session, this week is quite special as we have secured just that profit now. Now would like to see that the education, let's understand that what was the reason behind that it could still continue to rise back to the upside. What is the reason that trade was open? Always keep in mind, guys, reason is very important. Any trade that you open, where you can see that the market is, if you look at that area, what kind of market structure, you see that it is building up, and you can see there is this is where the market is slowly trying to push that price back above, and here is where what kind of price action it is forming. Looking at the long-term picture in the market, if you guys look at it, you can see that it's showing up how the market structure is building. Right now, the first step that we looked at when we are on those trade is the liquidity and the trend, right? This is where you must pay attention when you are trading, right? Liquidity and the trend. What is the trend in this market? Which way the market is grabbing liquidity? These are some very important but fundamental question that you need to ask when you are opening position. Did you guys like this trade? Say yes in the live chat if you take profit on that, and also give feedback. Welcome everyone. I sold dollar yen thought, DXY and dollar yen up. Gold is bullish as well. Yes, that's what we see, that gold is bullish along with also DXY. DXY might bounce back again while gold is inherently bullish. It's in a bullish trend. Now you can see that sometimes I told you guys that DXY and gold both could move in the same direction, especially when there is a economic instability. Now DXY going in a way that we might see that pullback, but gold is inherently bullish, and which is currently showing up in that direction that it's gonna be bullish. Now you can see that it's maintaining that uptrend, and there's an imbalance here on gold, and we could see the price to go ahead and fill that imbalance in that direction, which is showing the market potentially to go ahead and create a new higher high here. Now gold is a long-term bull market. More often you see the DXY and gold move in the same direction. I discussed this few times before in our previous live session. As in what situation you see that gold and DXY both moving in the same direction. Never make a mistake that, okay, DXY is going up, I will be selling gold. No, gold can be, you can consider it as an independent entity because of its the nature of this instrument. Why it is an independent entity, even regardless of DXY, though it is trading against DXY, but more often you see that it's a very interesting correlation. You see now DXY is highly bullish. You can see that it's breaking to the upside, getting some upside bias with a gap open, and gold as well. If you look at the 4 hour, then you can see also it's showing that upside bias, both moving in the same direction. Firstly, let's understand that why this happened. In what situation you could see that both moving in the same direction. Let's understand it, guys. Keep in mind that here is X divided by Y. How many of you have a very basic mathematical equation that you can understand it very easily? Okay, X divided by Y, right? So all those pairs like that against one another, right? For example, if you look at GBP slash USD, right? So if Gbpusd is going up, that means if Gbpusd going up, there are two reasons it can go up. One reason is USD constant, there is no change in dollar, but GBP is getting appreciated. So Gbpusd can go up. One situation. The other situation is GBP is constant, but USD is going down. Dollar is, let's say, going down. In that situation also, Gbpusd is going to go up, because even there is no change in GBP, but because dollar is getting depreciated, Gbpusd is going to go up because of this one is going down, right? Now, in what situation you can see XAU-USD, right? So XAU slash USD, that means it's trading against dollar. Now, in what situation you could see that gold and DXY is going up? Now, first of all, DXY, dollar index, right, is going up. That means bullish. Now, apply this equation here, right? XAU, that means gold, by USD. Now, if USD is going up and gold also going up, that means that what's happening is that the investment on gold is coming more than dollar. That means if, as an example, dollar is appreciating in value 5 points as an imaginary point, then gold is appreciating 6 points or 7 points. That means more value coming on gold than dollar. That's why both are going in one direction. Are you getting my point? Very simple, right? Now, why does this happen, right? You understood that, okay, this is what's happening, but why does this happen? Like, why it's happening? You see, this rarely happen, but it happens. There is one sign of this happening. Okay, you'll see that there's one sign of this happening. And that sign is some uncertainty. Okay, because gold is considered as safe haven for investment, because you can't print gold. You can print dollar, but you can't print gold, right? So therefore, in a situation where there is an uncertainty, economic, political, geopolitical, or environmental uncertainty, that's where it happens, because people more of going to the safe investment rather than risk investment. So most likely economic slowdown, right? That's why you see the NFP coming up later this week. There is a significant job data coming, some other uncertainty coming, that is impacting this instrument, both of them, right? And that's the simplest way to know. So that's why gold always trade as an independent entity. And we can see we have secured the profit here, which is another big trade we have closed, and would like to keep trading based on strategy, based on tools. And for those who have just joined, make sure guys you keep up with all the updates. Also in this live session we started 1 hour earlier than our regular timing, so this is gonna be a new timing as there's a daylight changes in my area. So we are making this live session now each day 2 hours or more, even more when needed, and so that we can catch most of the best trade in the market. Now, as you can see, with this movement, the market has made its bounce back to the upside here on gold, which is showing that potentially uptrending market structure, right? Which could continue to rise here to create a new higher high in this market. Now, What is the next move here? You see that there is an inverted head and shoulder here. The market is showing up that inverted head and shoulder. And that move that we can see on gold may potentially continue to rise here to another bounce back to the upside. Are you guys ready with me for another entry as soon as it appears? Say yes, we are always hungry as a trader, right? Now, what was the primary? You can see that exactly where we have opened in this live session. Guys, most of my trade is on the live. If you haven't watched some of my previous trade, I would highly encourage you to go back in the past session and watch that. That's gonna be really will change the way you look at the market. That will change the way you trade the market, because this education that you will not find anywhere except here. All of this education that I'm providing here, you guys have seen. I'm trading the live market in front of you, and also the actual strategy. This is the best way to learn and grow as a trader, is to know that this is the strategy being applied and this is the rules of the strategy that being applied, so that you can learn the strategy, grow as a trader, and also at the same time becoming a profitable trader who knows how the market works and how to trade the market like a professional, profitable trader. All right, so All right, so you can see the market is moving in that direction. It's hit that profit target. Our trade, we have successfully closed that position and looking for more opportunity coming in this session. Are you guys ready for the big one coming up next? Right, if you are enjoying the live session, make sure you also like this stream, subscribe to the channel if you haven't done yet, press the notification bell so you are not missing any of the content that I'm posting every day. And the market has made its bounce again back above here, which is currently making its way move in the direction of the trend. Now looking at here, with that movement on gold, it's maintaining this movement back above with a new higher high in that area. And as if you look at the 4-hour chart here, then 1-hour price action as well, the market is trending, maintaining a new uptrending market structure here in that area. So you'd like to see the prices going up and creating a new higher high here in that market. This is the 1-hour price action. The candle has just closed with a gap. Would like to look for that another entry. Now, finding an entry from a key level is the key, right? We have secured the trade in that way so that we can have those entries again for us to look for another one. Now, this is the 5-minute chart. You can see exactly as I mentioned earlier where we have opened, the market bounced off that level. Patience is key, as I mentioned always, that we more often look for patience when we are opening position. When you are patient as a trader, you always stay ahead in your trading. That's the secret of becoming a consistently profitable trader. Be patient. Wait for the market to show up the position for you and then enter based on risk management, which is very important. A big part of trading, psychology, that you let the winner running for bigger profit target. Now what is next? Where we can look for the next entry? That we are looking at. Before we go to that, what are the factors that you need to consider when you are entering into the trade? Now, sometimes it's easier said than done, right? Keeping those on track, that these are the rules and I'm looking at here. These are the rules I'm looking up here, but just to see that you have forgotten, right? Rules has forgotten. More often it happens. So key takeaway for this trade, that's why I break down every trade in the premium group, is only because of that reason, where you can exactly know that this is the reason, and you can keep learning over time so that you can also maintain that consistency of learning in your trading every single day. And to become consistent, the only thing that you need is keep learning and watching the same thing over and over again. Same trade that I'm posting over and over. Trading is boring, but it's rewarding. That's what I always tell guys. Trading is boring, but it's rewarding. Once you know that how it works, it becomes rewarding for you. And that said, here what we can see on the lower time frame, what are the most important factors that we looked at when we open the position? Breakup structure. This is the secrets of all breakup structure. Keep in mind guys, here is, we can see that there was a double bottom breakout, pullback, again breakup structure. Multiple breakup structure is where you need to look for the entry in the market. Wait for the multiple breakup structure. And you can see that the market has broken from the structure, and also this is a double bottom here. And with that double bottom, all right, so you can see a neckline of this double bottom, there is an order block. Why it is an order block? Also, this is a very important point to look at. If you look at this market here, right, when there was a trend, it was moving in a downtrend, creating series of lower high and lower low, which is in a downtrend. So when the market moving in a downtrend, that you can see it's moving in a downtrend, and in that downtrending market structure, there was a downside. That means that downtrending order flow in the market, and that downtrend needs to be changed to an uptrend, and to do that we see that there is an order block here in that area, and that order block is where we are looking at. So if you look at here, you can see this is a resistance which is turning support here. The market has broken from the structure with a longer ATR, that means the bigger ATR candle has given that movement for this price to drop, and then we saw it got rejected immediately back above here with a one single bounce back to the upside. This is what we are looking at here in this market again, and you can see it move. Now, how do you learn the strategy? The only way, as I mentioned earlier, guys, is through the repetition, right? Repeat the same strategy over and over again, same trade, look for over and over again, and that's how you can keep learning, keep honing your strategy over time, so that you can make it your second nature. Whenever the market shows up the trade, you can get into that. So what are the key points that you need to look at? The trend. Keep the trend in your side. Always trade with the trend. Trade in the major direction of the flow. So once you see the market prepared with a trend, the next thing that you need to look for is, once the market prepared with a trend, you know that it's in the direction of the trend. The next thing that you need to look at is the liquidity sweep, right? Wait for the market to prepare for a move with a liquidity sweep. Wait for the liquidity sweep so that you can get in the trade as soon as it appears in the market, because the liquidity sweep will give you the directional bias in the market, and that's how you can keep learning, keep growing as a trader. So that being said, guys, it was a great session with all of you. This is our new live timing. We came 1 hour earlier due to the time changing in that area, and I would like to see you there again very soon, trading live together. Until that, stay well, stay happy. We'll see you there very soon again with another live session coming in just a matter of 3 hours to trade the market again in this volatile trending market.